Hey there, my name is Zach and I am the founder of Roastery, and what I'm about to show you is basically the biggest opportunity that I have seen in crypto so far. And this presentation is really going to resonate with two types of people. If you don't really understand crypto and don't know why people are investing millions of dollars into this new industry and just really want to get a grasp of how to invest and why, then you will find tremendous value in this presentation. And if you already have crypto and simply want to multiply it and want to make millions in the next bull market, then you will know exactly basically what to do after watching this quick overview. This is an article from the year 2000. The internet may be just a passing fad as millions give up on this. And interestingly, the world gives us an opportunity for generational wealth once in a while. And most of the time when those happen, 99% of the people are looking the opposite direction and are most likely in panic mode. And there's always this 1%, only the 1% that is able to realize this opportunity and actually act on it and profit from that. And interestingly, the internet and crypto have a lot of things in common. Crypto is actually growing way faster in terms of the technology adoption curve than the internet. The number of cryptocurrency users is at an all-time high due to the global adoption even during the bear market. And digital assets are the best performing asset class of the decade, which went basically from a $2 billion industry to become a $2 trillion industry in a short span of basically 10 years. And yet 99% of the people are still not sure how to take advantage of this opportunity, because most people are stuck on the idea that crypto is a scam. Even though right now it's still an over $1 trillion industry, and it is expected to grow to become a $16 trillion industry by 2030. And this is research that has been done recently by the Boston Consulting Group. Now, on the government level, basically in the last few years, we have seen governments take the stance of being more against crypto. And the reason for it really is like this technology and the ideology of what's behind blockchain and decentralization is just so powerful that governments and banks are just afraid of the potential this technology could have. And right now that mindset is really shifting because governments and banks realize that they can't really stop this innovation due to the global nature of it. And right now they're shifting their mindset towards, hey, we don't want to miss out on this innovation. Like if we can stop it, at least profit from it, right? So in this meantime, while the governments have been trying to hold back and not really sure how to regulate the crypto markets, institutional interest has been continuously rising, but it has been really held back by the lack of regulation. And as we go into 2024, basically the three biggest things that are holding crypto back right now from making a massive move from an adoption and industry growth perspective, the problems are clear and the solutions seem to be in place. So the biggest issue, I think, of maybe 2022 was the fall of the major stablecoin issuer and just overall lack of transparency and just concerns around the stablecoin market. Now, stablecoins are simply US dollars that people can use in the digital world of crypto. And we had some major providers such as Terra Luna fall out, but the market is really shifting on this front. And again, a recent research shows that the stablecoin market is about to grow to $3 trillion in the next 5 years. And it's really going to be led by global financial and consumer platforms that are starting to issue co-branded stablecoins to power the value exchange on their platform. So if you Google Visa, if you Google PayPal, if you Google MasterCard and their crypto initiatives, and PayPal recently even announced the actual PayPal stablecoin launch that is happening within a few weeks from now, basically. And also Twitter, Microsoft, Tesla, so many other major corporations around the world are integrating crypto payments into their basically everyday business. The second biggest issue is the difficulty of institutional investment. And this is, I think, where the biggest catalyst is going to come in the next few months for crypto. So if you're a pension fund, if you're an institution, if you're a corporation, it's first of all quite difficult to make an investment into Bitcoin. And it's also very difficult to hold Bitcoin on your balance sheet. What changed in the last few months in 2023 is basically that there's a host of applications for spot Bitcoin ETFs. This means that you can purchase basically Bitcoin directly on the stock market. And this is going to allow pension funds and major financial institutions to be able to offer Bitcoin products to their clients and enable a regular flow of new capital coming into the Bitcoin and overall the crypto market. So BlackRock, Fidelity, the largest financial institutions around the world are competing to enable this. I think in the last, right now it's like 2023 September. In the past few months, we had 20-30 institutions apply for this, and almost every single week there's a new application coming for this. And basically it's inevitable that this is going to get approved. Right now there's been a little bit of delays here, but the more delays, the more pressure on SEC to have this approved. And again, this is basically inevitable. And the third problem is just overall the crypto exchanges that need regulation. Of course, we had some major exchanges fall out: Celsius, Gemini, FTX, and the SEC has been hunting down some of these crypto exchanges, trying to force them to comply. And due to the overall lack of clarity of what it means to comply as a crypto exchange, there has been a lot of setbacks on this front. But when it comes to the US, Coinbase has been probably the leading, obviously, crypto exchange, but also the leading one in terms of regulation. And if you look at any of the spot Bitcoin ETF holders and custodians, their applicants, they are all, or not all of them, but most of them are looking to use Coinbase as their custodian. So overall, this clarity is forming out. There's going to be a massive pressure on the SEC and the government to create this kind of compliance and make this machine work. But what this means is that in the near future, we might be at a situation where there's an approval of a by SEC recognized and endorsed crypto exchange in the United States. There's also the custodian of most likely what is going to be BlackRock's first spot Bitcoin ETF in the near future. So this is a massive, basically, clarity for institutions and for new market entrants to be able to come with new capital into the crypto market. And yeah, as I said, a large pool of capital would love to enter the space, but has just been simply held back by some of this regulatory clarity. And this is also the impact of a spot ETF. And if you look back at like 2003, when the gold spot ETF got approved, it basically, yeah, it absolutely blew up the overall trading volume and the usage of the gold spot trading market. And that's what I'm expecting to happen as well with Bitcoin. And you might be asking why now. Obviously, institutions like BlackRock, Fidelity, the big boys, these guys don't really miss. They are planning ahead for a very, very long time, and they are in this industry not just for this one cycle to get the quick 2x. These institutions are here because they see that the crypto market and the risk-reward ratio on investing into this market is basically extremely lucrative, especially when you look at other markets such as the bond market, 5% boring. You look at the stock market, 10% boring. Everything is overvalued at all-time highs. They look at crypto, it's at fair value, relatively low prices on Bitcoin, and we have the Bitcoin halving coming up. Now, historically, Bitcoin halving has always been a massive catalyst, a technical catalyst for the overall industry, and has led Bitcoin and the overall crypto market into a new all-time high each and every time. So if you look at the first halving rally that happened in 2012, in November, the price basically went up, the price of Bitcoin basically went up 120x, so about 12,000%. The second halving rally, about a 47x return in 2016. Obviously, after each of these rallies, the market always corrects itself and then goes on to find a new all-time high. If you look at 2020, May 11th, so around the COVID times, which was a third halving event where Bitcoin basically went from about $8,000 to about $68,000, producing a 660% return. And right now we are in the pullback phase of this market. And the fourth halving is coming up in April 2024. So basically, there is a major catalyst coming up for Bitcoin and the crypto market that has historically produced incredible returns. And I want to show you exactly what it means to basically be in the crypto market as an investor right now, and what are the potential returns that you're basically looking at post-halving event. The average return from the bottom, so basically imagine you have a pullback from a previous halving and you go into the halving event, and 100 days after, the average return of just being in the crypto market for this short time span of 1 year based on the previous halving events is basically 600%. So timing wise, it makes a lot of sense. There's plenty of catalysts for the crypto market at this stage to really scale with the new institutional interest. And the other thing that really basically perfectly aligns with this is market cycles. The market is running in 4-year cycles, and it's constantly switching between basically uptrends when the prices are constantly rising and downtrends when the prices are basically slowly decreasing. And if you look at the stages of this, I want to just talk about a very common misconception. Most people think when the prices are at all-time highs is when the best time to invest, which is completely wrong, because that is actually the time of the highest risk and the lowest opportunity. That's when everyone wants to buy. For some reason, everybody, when the market is euphoric and your friend is coming to you telling you, look how much money I just made, in most cases, you're already way too late for that opportunity. And for you to invest at that time and expect the same returns is actually a little bit foolish, because that's when you have the highest risk, because that's when most likely the market is going to pull back and you can almost witness losses almost immediately. On the other side, when you look at the market cycle, basically after a post-halving rally, when the prices pull back, that's actually when you have the lowest risk and the maximum upside potential. So lowest risk, highest opportunity when the market is in the depression phase, and lowest opportunity and highest risk when the market is trading at all-time highs. So I want you to pay close attention to 4 stages of this: optimism, euphoria, panic, and depression. So it goes like this: optimism, euphoria, fear, panic, depression, and then we slowly head back into optimism. Because that's basically what happened in the last 4 years in the crypto market. We obviously had the euphoria phase, which is 2021, not only in crypto but also in the stock market. We had a massive bull run, primarily retail driven. We had extremely high valuations of most crypto assets, and everybody was saying, hey, the institutions are coming and we are front running everyone. Now the truth is, most people got in way too late and had bought at this euphoria stage, when basically the prices, as I mentioned, it's a time of the maximum risk. And as we go into 2022, the market really started to cool down. And not only that, but we also had several high-profile exploits, bankruptcies, and just an overall market correction also in the equity market. And this wiped out a lot of unprepared retail investors who just don't understand market cycles and technical analysis. And after this, what we've seen this year in 2023, so again, we went euphoria, panic, depression is usually the sideways accumulation phase of the market. I'm going to show you in the next chart. And now we are in the depression phase in 2023. And what we have seen is that the market is starting to slowly recover from the previous lows of about 16K. And the retail interest at this stage is, I would say, relatively low, just because a lot of people got hurt and are just still licking their wounds. But institutional interest, which is way more capital to consider when it comes to the big picture, the institutional interest is very high. Retail interest is low. They are sleeping. They have been wiped out. And the regulatory light is there basically at the end of the tunnel to finally enable this institutional capital to start flowing into crypto again. And again, the 4th stage of the market is the optimism, which is 2024. It perfectly aligns with our 4-year cycle theory. 2024, I'm expecting further business and institutional adoption, an approval of the Bitcoin spot ETF, most likely starting with BlackRock, might even happen sometime end of 2023. There's going to be major stablecoin issuers coming out by public companies and highly secure and transparent solutions. And one of the biggest catalysts is going to be basically tokenized assets on chain, which is going to be primarily one of the biggest use cases for blockchain ever. So if you look at this chart, this basically compares all the previous 4 cycles in crypto's history with basically where the biggest opportunities are. And you see the euphoria phase, of course, and you see the panic phase, which is the bear side of the story here on the left side. Then we go into the depression phase, which is usually what we call the pre-bull. What you see in the middle is, in most cases, once we come out of the bear rally, there's always this 1 to 2 years of basically just sideways movement, consolidation, when there's not much happening into the market. But what happens next is really the beginning of the bull market as the halving event occurs. So the catalyst being the halving event on top of everything else I've mentioned before. But what the difference is here is, for you as an investor, is your entry point. Again, most people are going to get in at the euphoria stage, when everybody is already talking about it, when the more certain something seems, the lower the upside potential is, the higher the risk that is for you. Because the more certain it is for you to invest, most likely people who planned ahead and are more experienced and have an edge over you in the market are already in it and are already profiting, and that's when most people are looking to exit the market. So right now, what I mean by that is the slow retail investors are again going to get back into crypto sometime 2025, but there's a smart money, those who are preparing for this basically years ahead, buying the right assets that are going to basically give you the 10-20x return entries. Those are happening. When do you think those are happening? Do you think those are happening in the peak euphoria stage when the prices already ran up, or when the smart money is entering with the institution and all the other interesting part is coming into here? So timing wise, basically, this is the best time to enter the market. And I have made a similar entry around 2019 into the crypto market, buying Ethereum at like $100 and buying Cardano at like 3 cents. Some of these coins that I got into, and they actually went on to make 100x, 50x returns. And what I'm seeing right now is the same opportunity playing out, but this time even bigger because of the institutional interest that is coming into the space. So how do you make millions with this information? Well, you need to ask yourself, what is your main strategy going into this? And I'm just going to rank basically what I think are the best and the worst approaches to play in this bull market. So day trading is going to require a lot of time from you. It's going to require a lot of skill, and basically it doesn't really allow you to capitalize on this entire big run because it forces you to think very short term. I think it's the worst approach out of all of these. Then there's NFT trading. Really hard market without having insider information and edge. It's also a highly illiquid market, not like buying Bitcoin and pressing market sell and you can get out. You always need a second party to purchase that. So it's a really hard market, very illiquid and very, very speculative. So high time consuming, and overall the risk reward ratio doesn't really make sense, I think, on the NFT market. And in 9 out of 10 times you will end up losing money. Then there's yield farming. Yield farming in most cases doesn't really add up in terms of passive income. Everybody thinks yield farming is the passive income way of making money, but at the end you will end up spending so much time on managing all your positions. You're going to have very high level of impermanent loss. Basically, if you look at a yield that's 60%, because of impermanent loss, it's going to be maybe 15% at the end of the day. And you would think it's passive, but you end up spending so much time on this. And there's of course the high risk of the smart contract risks. Overall, yield farming is not the best way to play in the bull market. There's airdrop farming. Airdrop farming is amazing, but it's not something that you can do in the middle of the bull market. The biggest projects of the next run are going to be Eigenlayer, Scroll, ZK Sync, some of these big airdrops where basically you need to layer 0, that basically you need to farm them right now in this smart money phase of the market to really be eligible to get that big cash influx in your portfolio down the line. So good approach because it's free money, it's time consuming, but a select few of these airdrops, if you know what you're doing and you know how to do them smoothly, we actually have a few guides on the best ones and how to do them very efficiently. So it's a really good strategy because it's basically free. Then we go into the best ones. We look into private sale and basically seed investing into early stage companies. This is great because Historically, this has been one of the most lucrative opportunities in crypto. A lot of people don't really get access to this kind of deals. We do bring them to our members once in a while to be able to invest basically at way lower valuations than most people who are buying on the public markets. So I think this is one of the best ways to earn capital gains in crypto. Basically, your entry is going to be most of the time so low that when the token launches, you're already going to be up 4 or 5x on your initial investment. And the two best ones are going to be long-term investing. Here the key is the great entry points, knowing when to sell, knowing when to buy, and knowing basically which assets are going to be still there in the next bull market. Because usually, due to the overall narrative-driven and short-term mindset nature of crypto, some of the best performing coins of the last cycles are going to be long forgotten by the time the next bull run actually is peaking. And that's just something that happened very commonly in the previous cycles as well. And I expect it to happen again. So when it comes to long-term investing, it makes a big difference which assets you're actually holding into this next bull run. And of course, understanding the actual trend of the market so you know when to add and when to remove capital from those positions. And the last one is narrative trading. And I'm just going to talk about a specific example when it comes to why narrative trading is basically one of the best strategies that you can use in combination with your bulletproof long-term investing portfolio to help to scale that. Because narrative scale trading is one of those things that could be basically the 80-20 rule of crypto. You don't have to invest more than 20% of your portfolio into high-risk altcoins to get the 80% to get the same returns as your other 80% of your portfolio, which is more low-risk allocation. Because narratives are essentially influential themes that just shape investor perceptions and behaviors in the crypto market, and by that creating a trend and investment opportunities. So let me show you an example. This is the power of narrative trading. In the last cycle, one of the biggest narrative was Ethereum killers and the power of layer ones. There's always changing narratives in crypto, so you don't have much time. Not only the cycle in the bull market is short to capitalize on these opportunities, especially if you're not prepared for these tokens, the narratives, and the good entries, but also the narratives themselves don't last long, right? So in this case, 4 months is one of the longest narratives that I have ever seen. Sometimes narratives only last for a few months, and then they should rotate in between each other. So in this case, you could rotate out of Ethereum, and that's what I did personally, and rotate it into Avalanche when I've seen Ethereum is kind of peaking, topping out in the near term, and I see the emergence of these new layer one solutions with very strong narrative behind it because they are faster, because they are cheaper, because they have so much funding behind them to market them. And what happened? I rode Avalanche basically from $10 all the way to $120 after rotating out of Ethereum from like $100, and I sold it somewhere like 20x return on that investment. So that is the power of narrative trading, that you can use a part of your portfolio and basically be able to catch the new waves as the market is rotating between different phases and stages and narratives. So are you ready to capitalize on this opportunity? Because you really need to ask yourself a few questions to see if you're actually ready to get those 10 to 20x returns. And I always say this to all of my clients that I'm coaching: failing to plan is planning to fail. And I'm going to ask you 5 questions. Like, if you say yes, I have all of these done, then you're probably well prepared for, or at least better prepared than 90% of crypto participants. The first one is, do you have a system to know when to buy and sell, which is portfolio management 101. The second one is, do you have a plan knowing what to buy? Because if at this point of the market, you are already fully allocated and you have 0 cash holdings in your portfolio, I can tell you already, you're doing it wrong. Like, you're way too early with all of your allocations into the market right now. Are you better than others in the market? And this comes down to an edge, right? Imagine you watch, let's just talk about me. Let's just say I watch UFC right now. And After that, I go down to the bar and I start fighting the bouncers, expecting to win. Most crypto investors are going to come into the market, the bull market is already running, but they have no edge. They're going to think that by watching 3 YouTube videos and Twitter, scrolling to Twitter is going to give you an edge over other investors. That's what everyone is doing. That's what like people who are super late to the market and the opportunities do exactly. By the time the information is out there, you're way too late. So how can you be better than others in the market is first of all building a knowledge of what is a good investment, what is a bad investment, learning about technical analysis, learning about fundamentals of the market, how to identify narratives, trends, all of these things and knowledge is going to help you to basically think faster and think better than most people on the market. If you don't have an edge in terms of skill and knowledge, the only way you can really replace that, or of course time to acquire this, there's only one way to replace that, is basically by having a network. So do you have a network to access to best money-making opportunities and get in early? Because it's really hard, especially if you're a busy business owner or you're running, you have a high income job, you're busy, you're constantly dealing with other stuff, and crypto is kind of like a side hustle. It's really hard to follow the confusing crypto market. And because of that, by having a network, it's just like having a team who are constantly looking for opportunities for you, and you can invest together, you can analyze together, and you can make decisions together as well. And by that, significantly improving your overall ROI throughout the entire cycle. And the last one is, have you mentally prepared for the emotional control required to be an investor, especially in the crypto space? And in this case, another way of saying this could be, or do you have someone who can basically have most of this mental burden on them to make these decisions? For example, for us, we are all already managing basically 7-figure portfolios in crypto, and we are sharing it with everyone on what are we thinking in the near term in the market, midterm, long term, how are we changing our portfolios, and providing real-time alerts on all of these. So essentially, these 5 things are so important for you to really be able to maximize the gains in this next bull market. That is the opportunity that is coming. And I just want to talk shortly about Roastery, which is basically the winning edge for most of our clients. I'm just going to come here. Which is basically the winning edge for most of our clients, right? What do we do to help our clients to actually take advantage of this opportunity without spending a ton of time managing crypto? First of all, we have a completely built out investment strategy for the entire cycle. Just like I showed you before, the last 4 years, we have it almost broken down to a quarterly basis until 2025. And we go ahead, we find the best opportunities for you. So it's kind of like we are your eyes on the ground, like pocket financial crypto experts, and you have access to us 24/7 every single day of the week. We are going out there, we are finding the best opportunities, and we are basically sharing those opportunities with our clients on a weekly basis. You can of course also follow all of our portfolio moves that we make in our personal portfolios as well as in our hedge fund. And we provide the real-time insights. So whenever we find a new trend, a new narrative emerging, we're going to share that with you. Whenever we find the best tokens for that narrative, what will be good entries, the analysis for those, the technical breakdowns, the technical analysis breakdowns, we're going to all share those with our clients. And on top of this, we not just like throw our clients into the dark. We don't just throw you in the dark, right? So we give coaching, we offer one-on-one coaching, live group coaching calls multiple times per week, and we have an on-demand university with over 20 different lectures in them that can basically turn a first-time crypto investor into a professional one. So that's pretty much it, team, in terms of Roastery and in terms of the opportunity that I think in the crypto market right now is the biggest that I have ever seen. And I hope you agree with me, and I'm really looking forward to our conversation that's coming up. See you soon.